Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here today on Tuesday, July 27th for a Forex trading and cryptocurrency trading analysis webinar for you. Before we get into the meat and potatoes, we want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. Also, if you have not done so, please subscribe to our YouTube channel, Forex Trading Unlocked, or Twitch if that's how you prefer to watch our videos. Forex Trading Unlocked on there as well. And if you have not done so, check out the book, High Probable Japanese Candlestick Patterns, which is available on Amazon.com in paperback and Kindle versions. All right. We have the Forex-Trading-Unlocked.com website pulled up. From our navigation bar, we've already hit the workstation tab. We're going to toggle down. We have a Euro-US dollar chart ready to go. So the dollar is under a little pressure with a little follow through to the upside for the other currency cross bulls out there. The euro, being the biggest component of the dollar index, is definitely, after having been riding its lows, is making a surge in the late morning trade. We'll see how this manifests over the course of the rest of the day. But right now we have found a short-term little bottom here, and we're trying to find out how far we're going to correct. So let's expand these charts a little bit. So as far as from this high back here, we've already hit into the 50% area, 0.618 area. So if we're going to reverse off of a short-term little correction, this is pretty much about it that we're going to see. If we raise it up to this last swing high there from this low, well, then we have a little bit more to go. Then we could probably see a little upside pressure towards this area here to 118.64 half up to 118.93. So this is pretty much the buffer zone, I would say, for a short-term correction if the main downtrend is supposed to remain intact. Anything above here will have us starting to get a little bit edgy as the bulls really try and make a run for higher levels. If you go off of the high from back in May, since we've been breaking off of, we do have a little bit of room to the upside. We could get up to this $20.09 area and use this as our big corrective area. So somewhere in this range right here is where you're looking for in the short run. And then obviously up here, $20.09 would be our longer term target here. So as far as these two areas, for a short term resumption of a bull move, this would be our first stop. Anything above here then has us aggressively targeting yet that little extended upside area, which would be here at $20.98. So right now, the trend has been pretty neutral if you look at it over multiple months, but over the past month and a half, we are making lower move lows and lower move highs. Remember, we are still coming off of this lower move low right here. So anything below here will have this market in jeopardy of definitely hitting support pretty hard. We have a downside short-term target yet of $17.35 down to $16.75 as an extended sell-off objective. Remember, we are coming off a lower move low after a lower move high. This is our critical range. So basically, if you look at the short-term target area here, if we pierce this high, that helps to set it, that puts us on the neutral path. It doesn't necessarily make us a bull, okay? So that's what we're looking for with the euro as far as price targets. Now let's look at the British pound US dollar. British pound US dollar, after hitting support as well, is making a nice shine, nice run at it. Now here's the thing, is that we didn't have a big buy signal in the euro US dollar, but we did have a buy signal here in the pound. Okay, so we had a bullish engulfing line, which is, if you read the book High Probable Japanese Candlestick Patterns, you can find out how to trade that signal. If we use the big high from back in May and we look for at our 50% target, we're about to hit it, 0.618. So unlike the euro, which is in just a minor upside correction, we have the pound, which is definitely trying to push up through some resistance. Now remember that the pound has been in an overall bull market versus the dollar for quite some time. We are viewing this and have been viewing this as just a short-term bearish correction for the pound dollar. We have divergence in currencies. It wouldn't surprise me to see the pound make a run for new highs and literally make multi-month highs versus the dollar, while the euro would not. It would stall. I believe that that's what's going to happen. I think that right now we have the dollar under pressure. This is just a short-term wave. Now the thing is, if we get into this critical zone here, we take out this last lower move swing high, and it puts us in the neutral campaign. So that would be short-term bullish, longer-term neutral, or intermediate-term neutral, and long-term bullish. So it starts to get us leaning towards at least a chopping around somewhere in this area for the next month or two to starting to pressure resistance. Should we fall off of this area and come back down here, we'll have to see how that works when we get to it. I think what we probably have going on here is the development of a head and shoulders pattern. So if you kind of give us some time here, I'll see that's not even going to work here, but if we use, let's use the text here. So if this is a shoulder, or potential shoulder, okay, and then this down here would be your potential head. Now we're looking for yet another shoulder to form. So that's where we should probably still see another fall back into this area. And should we do that, then I could see us having a longer term upshot. So it now it doesn't mean that we're going to form a reverse head and shoulders pattern here. We could just start rallying and just continue to go higher. There is a steep slope right now. This is still being viewed as an upside correction in the short run. So we'll see how this develops. But this is our target area. Only if we take out the swing low from a couple weeks ago, whoops, do we start to look at this in a different way. You know, so if we get fall below $1.3574, all bets are off. The resumption of the bearish correction continues. But right now we're showing it was a big show of strength. I would use caution selling into this right now. I would wait for a confirmation, just like I would look for, you know, this other head and shoulder. Like if this head and shoulders develops and we can get a neckline, then we'll know when we get the breakout to the upside. So a little bit of indifference in this currency, but not quite like the euro. US dollar Swiss, this one's starting to show a little bit of weakness. And interestingly enough, we'll be keying off of this low from a little over a week ago and also this high. These are our key pivots. Trading above or below these will set the tone for where we're going. There is divergence once again in the currencies across the globe. I would not just follow one European currency with the others. This right here has the potential to be a nice sell-off here yet. So if you look at this on for clarity, here's your shoulder, here's your head, and here's your shoulder. So if this is a head and shoulders pattern here, and this is really becoming a big bear again as far as the overall trend with the US dollar Swiss, then a failure from 91.17 will have this market most likely coming back down at the very minimal to this area here, which is easy to make, let alone the 0.618. So this would be on a minor level our target area for where we want to see the Swiss come to. If we fall below the 0.618 area in here, well then I got a feeling this is market that would mean that we have serious dollar weakness going on in the market. So I don't see any of that really happening in the long run right now. I see it more neutral, maybe weak in the short run over the next couple days yet into this area, but then I see us getting another rally. Remember that we are coming off of this low here, made a lower move high. And now we're bobbing around with lower move lows and lower move highs. Short-term trend is negative. So I would be mindful of that. Watch out for this downward sloping resistance line. Only a breach of that really starts to put us on the neutral to positive path. Should we take out this shoulder here at 92.34, all bets are off. The US dollar bulls are back in place, and we will see a big run most likely. All right, let's look at the US dollar JPY. We had a sell signal that was on the 5 minute, let's see. so that one is working pretty good still on the intraday. Monthly. Okay, we're coming towards the end of the month, and it's interesting how it looks like it wants to make a turn, meaning a short-term bearish cycle. The weekly, not looking so strong over the past month. However, we're coming off a higher move high and a higher move low even from last week. So we really need to pound the US dollar yen over the next couple days because we're heading into the end of the month. So, oops, let's get to the daily. All right, so today we have a big sell-off. So the dollar's in play today. So I would be really cautious with this because we're having follow-through from yesterday, and a reversal of fortune is very, very likely when it comes to this. The overall trend for this market is higher. We took out this upward sloping channel here, and we've been making lower move lows and lower move highs. However, if we get a breach, we need a failure from here to confirm any real true weakness in this market. And if we come back above 110.59, all bets are off. This thing will start to build. I would expect more buying momentum to get hit as weak shorts start to scramble. I think right now, if you look at this is actually a consolidation base. If you look at from here, here, oops, this is the bulk of the trading. Let's see, let's get rid of this one here and make it like this. All right, so the bulk of the trading for the past few months has been between 110.40 and 107.75 basically. But we have more of a likelihood to swing off a low and make a new high than we do swinging off a high and making newer lows. So that's what we're looking at right now. I would watch over the next couple days. We need to fail from 109.05. So for aggressive bulls, I would say buy against this 109.05. A failure from here definitely is a negative sign. But if we are going to get a bounce and it's only a short-term correction for the bears here, then this is pretty much about the extreme. So this is a good risk area, looking for a breakout of 110, which will accelerate most likely, taking this up to, we have 112.5, well actually 113.5 to 114 even in the US dollar yen as a longer term target. And that even means that even if you have the dollar getting hit versus say the pound and the euro continuously, it's not unlikely to see that we would see the US dollar yen continue to go higher. All right, also in this trade zone is the Australian dollar, US dollar. This market's in a free fall. So if the dollar was so weak today, why isn't the Australian dollar rallying? That's because this market is just in a free fall. Especially with the new lockdowns being imposed, the way they're treating their citizens and shutting down businesses. They're almost in full lockdown in the whole continent. People trying to get back home to see their relatives or be with their families, let alone other things, are becoming very expensive and very grueling and tough for the Australians. So this, no matter which currency cross you trade against the Aussie, I would say look for rallies to sell and be very cautious trying to buy this market in any capacity, at least until there's a very, very big shift, either both geopolitically and as well as with the COVID response to what's going on around the world. So this thing's a bear. Look for reasons to sell, places to sell, and that's all I can tell you about this one. Australian dollar is just it's a rock falling down to the bottom of the sea. New Zealand dollar, US dollar is in a little bit of a similar situation, but not quite as bad. I think they're more likely to go sideways and chop around, maybe ride support a little bit, but they're good to get some rallies. You can see that today, right here, New Zealand dollar has a much more volatile day than it does with the Australia. But once again, here's the New Zealand dollar. It's falling apart to the dollar. That's because of what's going on there. So between their issues also with the lockdowns and COVID-19, you can see the downward sloping resistance line is maintaining this trend. We're coming off of a lower move low or high from yesterday, and we'll see if this market continues to disintegrate. And this is while the dollar is getting hit versus most of the major currencies. So once again, we've been repeating in our videos for over a month now, divergence is here and the currencies are free flowing. US dollar Canada, this one's had a nice little short-term correction. As far as dollar strength, look at here's the dollar strength too in the U.S. dollar Canada. This is where I think you're going to see the reversal of fortune because I think you're seeing strength in the major players in the dollar index, the euro, the pound, and such, and even with the Swiss, the yen. You know, but how come U.S. dollar Canada, where the U.S. dollar has only had this upside correction since the summer began, where it's been just getting pounded for 14, 15 months? Did we just finish this upside correction? Are we ready to continue lower? Well, obviously, if you are an aggressive seller, here is your risk up at 128.11. Anything above there, this trend is still an uptrend. However, we are looking at this low set here as a higher swing low. Failure from there has us leaning on 124.21. Trading below here really puts things on edge because then it's no longer neutral. Then we're looking for a resumption of the longer term bear trend and acknowledging that this was only a correction, especially with the fact that we have too many issues between the United States and Canada going on. Now let's get to the BTCUSD. They got the big breakout that's happened over the past week and a half. Look at this. Down at a low of 29,348-ish, all the way back up to 40 grand. Now it's at 37 and chopping. But if you look at it overall, we're just in a sideways trend. Now it does look like this market wants to break out. We did have a very big bullish buy signal here. This right here is a bullish engulfing line that was set off on July 21st, 2021, 21 of the 21s. So this is setting up the bullish buy signal. You can see that we've taken off. Came off of a lower move low and took out a lower move high. So this puts this market on neutral. I would still use a lot of caution. Obviously, if we come back down below this low here and take it out, that's not good. Then we're looking to see the Bitcoin back down into the mid to lower 20,000s. Have we set a bottom? Well, we've been trying to base. We'll see. If we fall back down, like I said, back on support, that's a very negative sign. This is the biggest move upside or downside that we've had basically except for this one here in June. So otherwise, the ranges have been very tight. They're still kind of tight, but at least we're trending. You can see we're opening, and it's just basically boom, 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 trying to tick up. So we'll see how this impacts the currency or the cryptocurrency market. I would use caution here. It might be a time to take a little profit if you can. ETHUSD, we're talking about a breakout to the upside. This one here also is doing the same thing after basically triple bottoming. We had a double bottom over here. Now we have this triple bottom, kind of made a newer low, but we did make a higher move high yesterday, which is big. So we are in the neutral campaign here overall, but this one is looking strong. The technology is there. This one looks like it does want to have a breakout to the upside. This one also had a bullish engulfing line buy signal here that started this trend to the upside. And this also occurred on the 21st of July. So we'll see if this is just a short-term upside boost of momentum where we have a lot of interest coming in. But the technology and the use of these things still exists, especially when it comes to Ethereum and Bitcoin and the blockchain technology. We'll see how it goes. Am I looking for this to go shooting back up to 4,200 anytime soon? Probably not. I think you're going to continue to base around, but I wouldn't doubt me that we could probably get back up to $2,750 to $3,000 for the Ethereum US dollar. Now let's look at XMR US dollar, Monero. This one here is also doing the same, pretty much reflection of those other cryptocurrencies, but not doing so well today, starting to be neutral. This one here, longer term, we are still bullish overall, especially because of the technology, but I don't really see it going much more between, I'd say between 320 and 400, I think would be fair value for it to start to chop around there. Now let's look at the Doge. So while everything else is coming off of lower move lows and making newer highs, well, this one, since this set a newer low here, is making higher move highs and higher move lows on an intraday basis, but we haven't taken out this high right here until we really get above 29 cents. 30 cents is like the magic pivot. That was where everyone's like, it's got to get back down to 30, I'll buy it and then sell it at 40, 50 cents. So right now I wouldn't say there's selling pressure at 30 cents, but this is where you're going to start to see the buying pressure if it is sustained. Above here, we're looking for it to go back up to 45, 55, 60 cents. I would use caution with this one. The sustainability of the technology is the biggest problem with this one, besides the fact that it's a pump and dump set up, with the way it's promoted. So there's a lot of issues with that, but it is out there. People are using it. It's just a matter of, like I've been telling people, if you can take your money and run, make sure you do. And if you got some profits left there on the sidelines, let it ride if that's what you want to do. But I would use caution for the long-term outlook for this one. Let's go back to the Euro US dollar as we close out this video. You can see not much action has occurred since we started. So a little mixed review for the dollar. Remember, we have divergence going on in the markets. That's really what's setting the tone for this week. I think we will start to see some moves, but you got to wait until tomorrow. We have the oil numbers and we have unemployment claims also on Thursday. If we have another consecutive week of higher unemployment claims on Thursday, and we have the big number coming out next Friday for unemployment, that is going to set a tone for the dollar. Most likely we're going to start to see interest rates swing. If they do swing, then I see we're going to have a little problem. Since the interest rate market has been coming off of lows, making short-term higher move highs, it's putting pressure on the dollar. That's where you're seeing this strength in the euro and the pound. It's not because of dollar weakness. It's just because of the fact that the interest rate equation is a problem. And other central banks around the world, guess what they're doing? They're raising rates, except for the EU, the US, and a couple other, the G7, that refuse to do things properly. And it's not raising rates to curb inflation. It's raising rates because we actually need to, for many other reasons. You don't raise rates to cut inflation. You actually do the opposite. So don't believe the propaganda. But we're in a situation where, guess what? We can't cut, and we need to raise because we've needed to do that already for definitely the past few years. But because of what's going on, the Fed is in control and they're propping up the debt market. So we need a flushing. We'll see what happens. And I think one of the biggest reasons that they're buying it up is because they're refinancing so much of the long-term debt that they're getting the best rate because they're selling it at a higher price. Duh. You know, and they're not going to have to pay that price when they come due eventually. So that's the big screw job on that one. Everyone knows that. It trades the cash market and the futures market, but those are definitely variables that dictate how currencies move. So be mindful of these things. And then also, once again, don't forget to subscribe to our channel on YouTube, Forex Trading Unlocked, or on Twitch, Forex Trading Unlocked. And check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Thank you very much. I'm Teddy Keckstedt from Forex Trading Unlocked, and we are going to put up a trading signal for you in just